People should know that we actually love each other.
Yeah, those darn producers of ours, they're antagonizing us. They're actually polarizing, dividing us. It's kind of like our government.
All right, folks, welcome to another episode of Rein It In. Today is going to be action-packed and fast-paced because we got a lot to cover and very little time. We are going to cover 6 different sticky notes on my desk. The sticky note management in this episode is going to be quite intense. First and foremost, there's a storm coming on the East Coast. We're not talking about a winter storm, more on that. We're going to give you some fundamentals updates on some of the recent GDP and CPI numbers. Get ready for that. Ontario's population is off the charts, but where are they going and how's Ontario responding? Then we're going to talk about the misleading headlines and how they use percentages to mislead investors and speculators like yourself. So don't miss that. Then we're going to speak about student rentals. And Patrick, we spoke about that on a previous episode. We got some new updated numbers on student rentals. And last but certainly not least, a ton, just under 1 million Asian buyers to be expected coming into this market. What's it going to do to our real estate market? Stay tuned, find out. Here we go. All right, Patrick, for our very first topic, we're going to talk about how there seems to be a storm on the East Coast and it's not related to the weather. Now, lots happening in the East Coast. When COVID first happened, you and I talked about how some of the micro markets, especially the East Coast, was going to benefit from this, given affordability and given the work from home movement. That movement, by the way, is not ended. It's just starting. But what's happening on the East Coast? Because quite a bit of change happening in that market. We've seen some huge appreciation in the last couple of years, huge rental rate increases, way lower vacancy than ever before, and some really good job prospects that have been quite strong, stronger than I thought they would be post-COVID. I like to see that.
Yeah, well, I think there's a couple things that we have to shine a light on. I mean, we've been talking about this for months, where we are seeing people move into affordability. And of course, what's happening on the East Coast is it is affordable, dramatically more affordable than Toronto. And so we're seeing a lot of people in that kind of, we'll call it Ontario/Toronto region, moving into Halifax. Now, a lot of that is the work from home cohort. Many of those are, but there's also jobs that are happening in Halifax. So we see affordability. We're also seeing a real demand versus supply issue, which we're seeing all over the country. But when you're into the region and you're into Halifax specifically, we're talking about here, although it's happening throughout, really throughout the Maritimes, but Halifax specifically. Point is this, is that you're seeing a lot of demand, limited supply. What's driving some of the jobs, of course, is construction. I still say that through it all, there's some great opportunities for investors out there, especially in the cash flow side of the equation. Appreciation early on, I think, will gain. But I still, just because it's East Coast, I still say we have to be a little bit aware of the job market and is it sustainable. I think certainly over the next 2 or 3 years, I don't see any big issues, but we have to be aware that it is a very dramatic and can be a very volatile job market on the coast. Having said that, because what we're seeing is with technology, what we're seeing with services, and what we're seeing with that work from home, it's an interesting dynamics that's starting to unfold, and we're seeing it in the housing as people now move interprovincially into that area.
Well, Patrick, right from the beginning, when we talked about this during the early days of COVID, I talked about how even if just a very small percentage, a tiny percentage, a fraction of a percentage move from the GTA to the East Coast or to any micro market, like one of mine, Peterborough, Aurelia, as an example, it makes a massive impact in that market and very little impact on the GTA because it's such a big market. And that's essentially what we saw. And by the way, we are seeing, and I think we're still going through the reversal of that. What I mean by that is I'm seeing this happening all the time. I just got a phone call this week from somebody who was leaving Peterborough, moving back into the city, moving back into their condo downtown because their job wants them back at the office. And that whole process is still going to take some time to unwind. It's not going to happen overnight, but it's not having a major impact on either market. And I'm not seeing any major outflow out of micro markets like Peterborough or the East Coast or any other micro market. What's happening though is rents in places like the East Coast, Halifax, has had the number one growth. If you look, we're going to put up this chart. Halifax in 2021 went up 4.8%, their rents. In 2022, 9.3%. They are the best performing rental increase, if you measure it by rental increase, they're the best performing market of the ones we tracked here, which is 7 different markets. So interesting what's happening on the East Coast. Can it sustain, Patrick? That's really the question. And so far, my opinion and what we've seen, they're sustaining it better than I thought they would, I got to say.
Yeah, I don't know if I had a view of it other than to say we knew it was happening. I still think that work from home cohort is going to be very, very strong. We're talking a lot at our R4 conference that's coming up. We'll be talking about 5G and the impact of 5G on that particular cohort of people. It really opens up doors of opportunity. Here's the concern about, some of these smaller cities, and we're talking about Halifax in this conversation. I just want to shine a light on it, is the infrastructure that it takes to support rapid population growth is really inconvenient, really annoying, really expensive. So we start to see when these cities, and if the economic development isn't keeping up with what's happening, it can be problematic. And, at the end of the day, people leaving Toronto and Ontario because of affordability, as an example, it can't all land in Halifax. Halifax can't take it on. The East Coast can't actually take on that volume. So those are some of the concerns, and housing is one of them. Where are we going to put people when you have that kind of inflow? So those are some concerns. But on an investor side of it, I think that if you're going in and being really specific in terms of what is the cohort you're actually providing housing for, and what it is that your exit strategy is, what are your plans for that property? So in other words, go in with a plan, understanding what the dynamics of that market are. I think there's some great opportunities for investors. And so a good place to be looking for great deals.
Here's another cool chart. The population growth in Atlantic Canada has been quite robust, since, it's actually been for quite some time, but especially post-pandemic. 50% of that growth appears to have gone to Halifax, which is why that market has performed so well from a real estate perspective. But what I will say is 2 things. Number one, that region is now going through the same type of problems the rest of the country is going through, which is affordability. By the way, affordability is becoming an issue there too, especially when you have locals trying to buy local things. They're saying, listen, this is not even affordable for us anymore. So they're going through their affordability challenges just like the rest of the country. They're not immune to it, first and foremost. But second of all, and this is really, really important, is some investors are going to chase that market. And some investors got ahead of it. Good job, good move. You saw the future. And as an investor, you need to invest for the future. But some people, Patrick, are going to chase that market. And just because the price is lower than other places, whether it be GTA, whether it be BC, whether it be wherever you're investing, if you chase any market, your risk profile goes up significantly, and that's where investors, speculators, guessers get hurt.
Well, and you make a great point, and I think there's probably some FOMO happening in the investor market out there where people are just rushing in, doing what they did even across the country earlier on. So this is something to be aware of. I think that sophisticated investors are going to go in, they're going to pay attention, they're going to look for cash flow, they're going to look for those deals. I know there's a couple of wholesalers in Halifax that we happen to have within the REIN community are hitting it out of the park, and they're finding great deals for investors, and those investors are taking advantage of it. But again, they're, as much as they're betting on appreciation, they're buying for cash flow, and they're being really strategic and responsible in terms of how they're going into that market.
Beautiful. Patrick, East Coast, sticky note covered. Let's see how my aim is on this show. Oh, looks like I'm right on point. All right, Patrick. Next, we're going to talk about fundamentals. Fundamentals is as sophisticated real estate investors, that's how we make real estate investing decisions. We don't guess. We don't make emotional decisions. We make data-driven decisions. And the data is now coming in. GDP updates are coming in for the first part of this year. CPI, inflation updates coming in. Let's talk about what we're seeing in the marketplace and then talk about where this is going.
Well, we looking at GDP, and not surprisingly, GDP is starting to slow. Now, we're going to talk a little bit about where it's slowing, but one of the places that it is slowing is in the housing market. And for those who are part of the REIN community and have actually been following us, certainly over the past 2 or 3 years, we time and time again have been pointing out the importance of housing to the Canadian GDP in terms of the growth of employment, of what drives the economy, and housing makes up a big part of it. And as you can see by the chart, guess what? As we go into this first quarter of 2023, housing is actually slowing. We know that. We'll look at some other data around housing starts and construction overall. And so we have to look at GDP as slowing. And if you're in the real estate industry, you're going, this is a recession. technically we're not in a recession, and we are slowing. The numbers, by the way, JG, we've said it before. I mean, we could maybe look into the third or fourth quarter of 2023 and say there will be a technical recession, but I'm not seeing any indication of that yet. And of course, that can all change because things are happening on a kind of a geopolitical macro and what's going on in the world overall that could drive it. But right now, it's going to be soft in some regions, but we're not technically in a recession, although if you're in the real estate market, you may think you are.
Yeah, well, but this is where the opportunities live. And if you're not coming to the R4 conference, by the way, folks, you really got to get there. We're going to talk about regions, rates, recession, and real estate. Anyways, I digress. But I want to talk about this chart, Patrick. There's a couple different things that I see on this chart that I want investors to pay attention to. The first and foremost is this is a very, very specific snapshot in time. I would like to see this chart pre-pandemic. I'd like to see the 2018 numbers, the 2019 numbers, because it's sometimes, especially when you pick like Q2 2022, that was at the height of us coming out of the pandemic. Really very difficult to look at that as a baseline of numbers. It's an unfair baseline. So that's the first kind of thing I see here. But the second thing I see, and that is to show, and you're going to love this statement, Patrick. It's really going to anger you, which is kind of what I'm going for. But look at that green bar, which is the consumption. And you can see the consumption has really, really shrunk. That's what the Bank of Canada wanted to do by raising interest rates. They have done that. Given this chart, they've done exactly what they wanted to do. Are they going to go too far? Most likely, because that's what they always do. They always go too far. They do too little too soon, and they do too much too late. Always. That's every government entity, including the Bank of Canada. But what they wanted to achieve to soak up that consumption, they have achieved based on this graph.
Yeah, and a lot of that is really caused by the lack of disposable income, given the increase in rates, given the increase in line of credit payments, which everybody got very indebted. I think the number is 185% or even higher of the indebtedness of the public debt. So the point is that as much as we see mortgage debt coming down or not growing because people aren't going and buying real estate, they're not qualifying for mortgage, well, we're starting to see that consumption come down, but we're starting to see personal debt rise again. So in other words, credit card debt is starting to come up, which means that people are actually borrowing off their credit card to pay their monthly bills. So yes, consumption's coming down, but it's not a good thing, and it's not like people are buying less and putting more money in their bank account. They're actually taking on more consumer debt in order to pay their bills. And there's a striking balance there that has to be noted. So will TIF, do something more with rates? Probably not in 2023. That's kind of the general consensus. But I think they've done what they said they wanted to do, which slow things down. Will it be enough? I don't know.
Well, we're going to find out. Only time will tell. But Patrick, back to what you were just saying about savings. Actually, savings is the only thing that actually will take money out of the economy, which is ultimately what we don't want right now, is money out of the economy. We want that money to churn and to turn over as many times as possible. Savings doesn't do that because savings just sits idle in most cases. Interesting to see what's going to come forward. But my point to this is, yes, raising interest rates may have, shrunk consumption the way it has based on this graph, but there's been other unintended consequences, Patrick, that you and I have been constantly bringing up. Like, for example, the investment in building construction has really come down significantly, and we can see this graph here we're putting up on the screen. It's come down quite sharply. Now, it is back to kind of it seems to be somewhat of its average. Is it going to keep going down? That's the question I'm very curious about, because right now we're back to where the averages was, which, by the way, is way too low to sustain the growth in population we're having. That's a separate conversation. We'll come back to that. But let's see where it goes in the future. But right now, construction is really having a tough time. I mean, its housing starts are down as well.
Well, you have to consider that. We'll use, aside from construction alone, but let's just say business loans overall. I mean, ultimately, the cost of money is tripled in some cases, and so construction is slowing down, but also business is slowing down. But on the construction side of it, we'll get into it, I think, shortly. But we have to look at the continuing conversation about supply and demand. And if construction is slowing down, then hence supply is slowing down. Demand is not changing because we continue to have that level of immigration that's driving the demand. And so this is going to be problematic. We're going to see even more headlines about the supply and the demand issue.
But this just, as investors, and that's who watches this show, Patrick, are investors, people that are trying to be sophisticated investors. They're learning, they're growing their knowledge to become sophisticated investors. When I see charts like this, the average real estate guesser, speculator, they have whatever reaction they have. When I see a chart like this on the real investment, build, and construction, it coming down significantly like it has, I get excited. And I'll tell you why I get excited, because number one, I know as an investor, that means that there's a spot for me there. There's an opportunity. There's a moment where there's a gap that I can fill as an investor. That's the first thing that's exciting. The second thing that's exciting is this is my insurance policy. I know we do not have enough supply for rentals in this entire country, especially the markets I invest in. As a result, I feel like fantastic. That lowers my risk knowing that I can keep doing what I do in the real estate business. That's the way I look at it.
Well, as investors, and especially if we're into the game called buy and hold, where we're holding real estate for the long term, what do we want? We want clients. We want that tenant to be able to, having the demand of our tenants, of our clients, that's going to drive our portfolios, and we get to fill the gap and have steady clients coming in and know that it's there for the long term. I don't see this problem getting handled anytime soon. As we know, when it comes to building and the government, really, the cause of the problem that we have with supply was the government. So can we expect them to actually fix the problem? Not likely.
I mean, any chance you get to throw Trudeau under the bus, you do, and you just did. Good job.
Okay. This will sound like I'm defending Trudeau, but at the end of the day, this isn't just federal. This is actually provincial, municipal bureaucracy that's causing
It's
problems.
mostly municipal. This is mostly municipal, but I will tell you what Doug Ford has done in Ontario is a game changer. We've talked about that on previous episodes. I'm seeing the effects already in my market. I can't wait to talk more about that. Don't have time for that today, though. Patrick, real quick, tell me about CPI, where it's at. It's coming down. There you go. That's all you need to know about CPI. It's coming down.
Well, listen, it just depends on what part of CPI you want to look like. Yes, it's coming down. But of course, what we do know is that food prices continue to rise. And we look at the cost of shelter continuing to rise. And then the proportionate share of interest that goes to paying a house is also a big part of CPI. So the point is that as much as it's coming down in some regards, at the end of the day, people are having to spend more money to feed themselves and to house themselves. And those are two categories that we can't ignore and we have to pay attention to. And, I don't see that changing anytime soon. And I still go back to what I've said in the past. As much as oil prices seem to be at a low right now, I look into 2023, I can see them doing nothing but rising, which will then drive transportation costs and additional food costs. So that part of it, I don't think is going to go away. And certainly raising interest rates isn't going to fix the problem, because people are going to need to eat always, regardless of how high the interest rates are. And they have no control over food.
Here's a little pro tip: grow a garden. There you go.
Grow a garden right there.
Pro tip. I know that's what you're doing, Patrick. That's what I'm doing. So, grow a garden. All right, Patrick, next we're going to talk about Ontario's population. Now, all of Canada has seen pretty incredible population growth in the last couple of years. Immigration is really fueling that. Ontario is the number one place where most people come into, and then from there they disperse. Let's talk about Ontario's population growth, because as you mentioned in various other times, the East Coast cannot be a pressure valve for Ontario or for GTA's population growth. It just doesn't make sense. Where is Ontario's population growth going, and what's Ontario going to do? Because if they don't do something about housing soon, this issue is only going to compound and get worse and get worse and get worse.
This is such a huge topic right now. And as we're doing this particular segment, we just saw Trudeau speak to immigration, where he said immigration is actually good for immigration. It was some ridiculous comment that he made. And, let's just break it down. At the end of the day, we've got a lot of people coming into this country, planned immigration. In other words, people coming here, not just for work visas, but they want to be permanent residents. Then you've got refugees who are likely to turn into permanent residents. And then you got non-permanent residents. So you've got hundreds of thousands of people coming into the country. We know that they're going to land in Ontario. They're going to land in Montreal, Toronto, Montreal, and Vancouver. But what's happening in Ontario specifically is that you still got record growth, population growth. But when you look over the past couple of years, you start to see that it's starting to kind of slow down a little bit. You've still got net positive growth, which is great. Good news. But at the end of the day, affordability is driving people into other regions. You know, we talked about East Coast, but then you look west, you look to Alberta, and you start to see just how many people are moving into that particular province. And on that side of it, you know, all of this is driven by a couple of fundamentals, JG, which is there are jobs across the country. So when people are coming in, they're looking at what's happening in Southern Ontario. They're finding jobs in some of these regions, but ultimately they're going to affordability. They're drifting to affordability, which means East Coast, which means Alberta, Saskatchewan, and primarily. And you start to see that that is what people are looking for. They need work and they want to be able to have a great lifestyle or build a lifestyle because they've got good jobs and it's affordable. So that's what's happening in the Ontario region. I want to go back to, you know, the segment we did on construction and speak to non-permanent residents, and then I'll turn it over to you. But we see that the construction side of things is slowing down. The cost of construction is high, so we're not building as many houses. We are in fact building more apartment buildings. By the way, you know, this is something that we have to consider with the non-permanent resident side of it. Now, here's the thing about this. There is a little underlying risk here, is that if construction slows down and we've got non-permanent residents coming in, several 100,000 of them, by the way, they're actually filling the jobs that we needed filled. We were labor shortage. But if construction slows down, given how big a part of construction is of Canada's economy, of GDP growth, then we're going to start to see that those non-permanent residents are going to be eventually leaving because there's not enough work here. When they leave, rental demand will come down. Now, I'm pointing this out not as a catastrophic thing, but as investors look at that multifamily space, they are building, so they're building more units. And then right now, there's a huge demand with non-permanent residents, which have a tendency to go to those units. So when we look down the road, we have to look at it and say there is that underlying risk, if you will, that we're going to see rental rates spike, particularly in that multifamily unit specific apartment buildings.
Yeah, I think I got a couple thoughts on this, Patrick. The first one is that there's such a shortage in the trades business, in the construction business, that we can easily absorb a slowdown. And this is just, you know, being in the business myself. There's no doubt that a slowdown people wouldn't run for the hills because there's always work to be done in this business, no doubt about it. And the outgoing, you know, your generation, by the way, you're to blame for this, Patrick. Just so you know, you're to blame. It's you and those friggin' baby boomers that are all retiring, all moving down south, all moving to the Caribbean. Now you're leaving us millennials. I don't even want to put myself in that category because I'm older than that. But, you know, the next generation has to pick up this slack, and we don't have enough labor to do it. And as a result, we need all the immigration we can get that is going to work in that business. And I'm not sure, by the way, how many do work in that business or do end up finding their way in that business. So that, you know, there's an interesting issue there that's developing possibly. But I do want to talk about the net population growth in Ontario because you brought this up. It's a very, very good point. But if you look at this chart that I put on the screen now with the green bars, I mean, just look at from 2009 to 2016, you know, it was about 250,000 people, net population growth by 2-year period. About 250,000 people was kind of the average. And then it jumped up in 2017. This is way before the pandemic, by the way. We can't blame any of this on the current government. It jumped way up over 400,000, and it's declining a little bit. But my gosh, it's still way above its average is my point. And you know, how do we wrap this topic up in a nice little bow? The bottom line is there's not enough supply for all this incoming migration and immigration coming in. And you know what? More people have to go from Ontario to Alberta or Ontario to Saskatchewan or Ontario to the East Coast, because unless we're going to fix a supply issue, which is our insurance policy as real estate investors, this problem only compounds and gets worse over time.
Yeah, I think, you know, what the message we can get in this particular segment, and we'll speak to it a little bit more, is, you know, investors need to, you know, if you're forewarned, you're forearmed, which is that as these things start to shift, they're going to make epic headlines around it. They're going to be those clickbait headlines that we have to pay attention to and not buy into. Again, we have to say, look behind the curtain, look behind the headline at what the reality of it is, because if construction starts to slow down, if non-permanent residents start to leave, then we're going to see really big headlines and it's going to be very dramatic. And so just know that there's a very good chance that we're going to start seeing those headlines in the coming months.
Excellent. Ontario's population growth covered. Oh, good shot. Yes. Now, Patrick, let's talk about misleading headlines and percentages. I don't want to spend too much time on this, but you and I both very passionate about making sure that the average real estate investor that's out there, whether they have one door, 10 doors, 100 doors, understand that these headlines, and my gosh, the clickbait that's going on right now is incredible. And we're in a place right now because we're at the bottom of a cycle. We're at a place where the headlines upcoming are going to be sensational. You're already starting to see it, Patrick, like the headline about active listings, like the headline about condo prices selling for above list price. All this stuff is really going to get the market in a tizzy, and as investors, we got to be able to see through this clutter.
I think, the message here, first and foremost, we talk about clickbait headlines and we make fun of it. But the problem isn't the clickbait headline. The problem is that people don't go beyond the headline. So they're actually just reading the headline as if that's giving them the information. When you actually open and read the article and take the time to kind of dissect what's being said, sometimes there's great information in there that's really valuable. I think the thing that in this particular segment is that we got to talk about and shine a light on is that when things are being expressed as percentages, it can be very dramatic. When we say, well, listings are up 80%, like, okay, well, then let's look at what the number really means. And what the number really means is it's not off the charts odd. It's up 80% compared to what? So if, like I said before, if I had 2 and all of a sudden I've got 4, holy cow, things have doubled if I only look at it as a percentage. So the point of this is that when we see these percentages, we have to dig a little bit deeper and go, what's behind the percentage? What's the real numbers, so that we're not being driven emotionally. We're actually looking at data. And percentages don't always give us the best indicator and aren't real data unless we have something in a context, a benchmark that we can measure them against, really.
I think that's the advice right there. That's the advice I'd like to impart onto people and real estate investors that are reading various, publications and so on and so forth. Anytime you see a percentage, you should do 2 things immediately. Number one, look past the percentage and try to get the real number, and then compare that number to the trend. And as soon as you do that, you get the truth of what's actually happening. Forget the percentage, look for the number and compare that number to the trend. And then you actually can make an educated decision, a data-driven decision on what it means to you.
Well, I think, and you said something that is really important. We went through an epic past 2 years in the housing market in terms of pricing and sales, and everything was amazing and everybody was a real estate investor genius. And then all of a sudden things come off. They were coming off epic highs. And then if you express that as a percentage, guess what? It feels like you're hitting epic lows. But to your point, you use the term, and I think everybody needs to look at this. If you look at sales and if you look at prices, they're coming back to the trend line. Now, if they bust through the trend line, maybe that's a different conversation. But they haven't bust through the trend line. Yeah, prices are down in some areas, let's say 20%, 25%. But there's just as many areas that they're not really down at all, number one. And secondly, even though they're down 20%, in some areas, they're still 30% above even 2018, 2019 levels. So a lot of these sales and a lot of these prices are coming back to the trend. And I think that's where we get really messed up if we're looking at percentages.
Love it, Patrick. So true. Misleading percentage headlines covered. Ooh, I missed the camera on that one. All right, next, Patrick. A couple weeks ago on an episode of this show, we talked about student rentals. And I was saying, and I was asking the question, whether or not we're seeing a lot of student rentals, because it's something that used to be huge right before the pandemic. Right before the pandemic, mostly, I was getting a lot of questions. It seemed like every second phone call I was getting is somebody trying to convert a single family to a rental, specifically a student rental, in order to maximize cash flow. That entire thing went away during pandemic because the schools got shut down and so on and so forth. My question to you was, are we seeing the resurgence of that? And funny, just by asking the question, I guess it came back into my sphere. I've had several requests to manage student rentals for our company at Vistra Property Management in the last couple of weeks. Now, we don't do that at Vistra, but the point I'm making here is it is starting to creep back up. People are now saying, hey, we should get back into student rentals. What are you seeing from your perspective?
Well, listen, I've been hearing a lot about it. And when we look at the volume of international students coming into the country versus the supply, if you're an international student and if you're really in the trenches of it, you're calling it a crisis, a housing crisis. And, if you're that international student, the cost of a room, the cost of what you're getting is literally like a closet in some cases. But what's interesting about that is some people are getting very innovative with what they're doing. And so there's a couple of I don't know what the regions are specifically in Ontario, but what they're doing is they're taking what they would refer to as a McMansion and they're turning it into a rooming house, not only for international students, but non-permanent residents. And so there's 4 and 5 places to park. They're renting out rooms with a central area. They're being very diligent in their choosing their tenants, so screening their tenants. And so what's interesting about it is the feedback so far is that these large homes are being turned into rooming houses. They have lots of parking. They have adults that are living in there and no children. And they have adults that are living in there. They have got a central area because they've got, let's say, a basement. They've got a family room. They've got different central areas for people to show up in. And they're charging as much as $1,000, $1,500 for the room. And of course, the use of kitchen facilities overall.
Oh, okay.
So it's an interesting way to solve a problem. Somebody maybe tapping into the opportunity, but I thought it was quite creative. And that's the crisis that we're at, is that's the kind of tactics that is being used.
All I got to say about this tactic, Patrick, is if an investor wants to get into that, get ready, be ready, understand what the hell you're getting into, because that is a rough business to run. Let me tell you, even if you think, oh, it's going to be students and they're fantastic and the students are very wealthy coming over, whatever story you have around there, trust me, I've seen many of them. It's a very rough business. And what I mean by rough is it's very intensive. You need to do a lot of hands-on management. And if you think you're just going to farm this out to a management company, most management companies don't manage those because they're so intensive. So just be aware before you get into that business. Just be aware of that is all I got to say, Patrick.
Yeah, but it goes back to the point of, when we talked about international students, it is actually, if you're in the trenches of it, if you're that student, supply isn't there. If you're that university, but there's lots of politics behind it, right? And the reality of it is international students bring billions into the country, and they bring multi-millions into a municipal area. Universities have a tendency and are being accused of being, I guess, overzealous with how they allow and how many students they bring in.
I'll tell you what is a fantastic tactic, though, Patrick, is if you're a student yourself and you should definitely buy a property and turn your own house into a student rental, assuming 100%. You're a student. And that is a phenomenal strategy. Second phenomenal strategy is if you're an investor and you partner with a student to do it and make them a part of the business, that's also could be a phenomenal idea, Patrick. But student rentals, definitely something to be aware of.
100%.
Good shot. Last but certainly not least on what we're covering here is this new headline that just came out about just under 1 million. I think it's like 899,000 new Asian buyers to be expected in Canada by 2025. This has clickbait to me written all over it. What are your thoughts on this? Because this is, to me, is somebody that is just looking for publication. They want some news coverage. It's a PR stunt. Any substance behind this report?
Other than it was a StatsCan number. So, if Statistics Canada is putting that number out there, what does it really mean? And given, the limitations they're putting on foreign buyers, I don't totally get where they think it's going to go or why they bring it to our attention. Having said that, the reality of it is that there's always somebody who figures out a way to work around the system. And we talked about it when we talked about foreign buyers and what the actual penalties are, for example. And ultimately the penalties, we got an election coming up in a couple of years. The whole program might fall apart. And so there's lots of foreign investors who are willing to take the risk. When you see that maximum fines are only 10 grand, they're willing to take the risk. And I think at the end of the day, it could be a thing. It's just be aware of it. And it's going to be interesting to see how it unfolds. The point is that, again, this was a StatsCan number, so they're obviously aware of it. And it's interesting that there's some focus on it by StatsCan, given what some of the rules are around foreign buyers.
Yeah, a very interesting report. But is it going to make a fundamental difference in this marketplace? I'm not so sure, Patrick. I think you're 100% right. I think it's given where we're at in this marketplace with the new rules that have come out. Is this going to transpire? I don't know. It's a forecast. It's a guess. It's that person's best guess at it, including StatsCan. And we all know, Patrick, StatsCan does. Just because StatsCan puts it out doesn't mean it's necessarily accurate. The same way, just because the Bank of Montreal puts out a report doesn't mean it's necessarily accurate. So I would take this one with a grain of salt. I certainly am.
Well, I think so. And I've said before, I don't think people are generally looking for something to blame for the problems that we're apparently facing when it comes to supply versus demand. And so we look at, and the government is great, and the newspapers or the media is great at shining a light on this thing called foreign buyers. Let's blame them. We know that foreign buyers are maybe a very small part of an overarching, much larger problem. So I don't put a lot of credence, I never have, around foreign buyers and what they do. It's good politics. So that's how I'm looking at it.
Asian buyers covered. All right, Patrick, that does it for this episode of Rein It In. Folks, if you are anywhere close to the real estate market, you have got to come to our R4 conference. Region, rates, real estate, recession. We're covering it all. It's going to be an incredible event. It's going down February 24th and 25th. If you're not there, you are definitely missing out on this year's top real estate conference. By Patrick, we have people there from around all over Canada, from economic development officers to mayors to in the trenches experts to developers to politicians. We got it all. It's going to be incredible.
It's going to be amazing. Be there.